Hello, everyone. This is Clay Chase with Torrey Hills Capital. Welcome to the Nano One Materials Corp virtual presentation for January 28th, 2026. I trust and hope you're all well, having a great start to the new year. Now, as many of you know, we are constantly on the lookout here for companies that appear to be either underfollowed, underappreciated by the market, just overlooked, and they could be well positioned for some above average enterprise growth over the next couple of quarters. Therefore, I'm very excited to be sharing with you a client that we feel is particularly well positioned to benefit from what we and many others in the market expect will be a prolonged upward trend in the demand for lithium iron phosphate, or LFP, based batteries and the highly engineered components and specialty materials that are required to build them. And as always, if you have a question during the presentation, feel free to ask by simply clicking on the Q&A icon on your Zoom taskbar. You can type in your question, and we'll be sure to get that question addressed at this time during the presentation. Okay, let's get started. Nano One Materials Corp has developed and is in the process of commercializing a proprietary, cost-effective technology for manufacturing the active materials that are the key building block for making the cathode layer of lithium and cobalt-based batteries for a myriad of end-use products, including but not limited to EVs and standby energy storage. And as you all know, the market for these batteries has grown rapidly in the past decade. Demand is expected to grow exponentially over the next decade or two based on the global ramp up of electric vehicles and AI data centers, which I know you all are watching right now. Nano One's one pot process technology greatly simplifies the current process technologies used primarily in China and other regions of Asia and creates a cost-effective and cost-competitive cathode active material, or CAM, which has superior properties for longevity and durability, while at the same time dramatically reducing the downstream waste streams and water usage, making the process ideally suited for use in the Western world. Also, recent tariff and supply chain national security considerations are ushering in a major shift in the battery manufacturing landscape as major suppliers reshuffle their operations to address these macro forces, creating an ideal window for the adoption of Nano One's unique technology as battery makers look to move manufacturing of these critical materials closer to home to adapt these changes, as well as comply with several soon to be in place supply chain regulations, which in some cases will be mandating 100% Western source supply chains. Nano One Materials Corp trades on the TSX exchange under the ticker symbol NANO. Also on the OTCQB, the ticker is NNOMF. Currently, Nano One is priced around 70 cents per share, giving its market cap about $90 million. With us today to discuss Nano One's operations is the company's founder and CEO, Mr. Dan Blondal. Hi, Dan. How are you today?
Fantastic, Clay. That's a great introduction. I really appreciate that. Thanks. Really
You
sets the
bet.
stage well.
Well, great. Well, welcome to the program. Thanks for taking some time to get us all up to speed on everything Nano One, and we're all ears. I'm going to stop sharing. Actually, I'm going to do a couple things so that you can share your screen.
Wow. Okay. I think I'm
That's
good.
great.
Just going to shrink my little window here. Don't want to look at myself while I'm presenting. There you go. That works well.
Everyone knows what you look like now.
Yeah. Great. You guys can let me know if something goes wrong with the screen.
We will.
Okay, great. Thanks, Clay. Well, let's get started. My name is My name is Dan Blondal. I am the CEO and founder of Nano One Materials. I've been at this game here for about a dozen years, and we're going to walk you through in more detail what Clay summarized very well in the intro piece. So Nano One is a process technology company, and we're developing technology to make lithium iron phosphate and other lithium ion battery cathode materials. We are a technology company, and our focus is on improving the underlying process to drive down the cost, the complexity, the environmental footprint, the the permitting burden, and ultimately to make a cost competitive alternative to the industrial LFP that is being made in China today. So that's kind of been on a very kind of rough scale. We have developed a modular and scalable technology that can really be sited anywhere in the world. And we believe this can bring about a much more resilient, localized, and simplified supply chain to address energy security needs and really just a growing need to have more regionalized supply chains with allies and like-minded jurisdictions. Pardon me while I figure out how to advance the slides. We are, as Clay said, we are a TSX listed company with tickers, symbols in Frankfurt and, of course, in the US under NNOMF. I will be saying things today that would be construed as forward-looking statements. And I encourage you to do your research as you make investment decisions going forward. As always, with any company in the public domain. So we'll walk you very quickly through our executive team and leadership team. Currently, we are about 50 people in two different facilities. One on the west coast of Canada, just outside of Vancouver, in Burnaby, and that's our R&D and development center. And then we have a commercialization center in Montreal with about another 50 people. And there we have a full scale demonstration plant, which I'll walk you through in more detail. We have leaders in the industry that come from the mining and resource industry, long-standing members of the battery materials community and batteries community, very strong government relations in Canada, but also in the US, and a considerable amount of business development expertise in the electric vehicle space, and now, of course, the emerging data center and battery energy storage space. Board of directors, I'll highlight Anthony Tse, who's our chair. He was the CEO of a company called Galaxy Lithium, which through a series of acquisitions is one of the leading lithium producers in the world today. And on our advisory board, Robert Morris, Joe Lowry, Yuan Gao, Dong Hui, and Frank Fannin all really represent us from the lithium, from the transition metal side, from the battery side, and open doors for us in jurisdictions in Korea, the US, and other areas around the world, including China. So I will dive into a little bit more detail. Everyone likes to see really the market stats here up front on the right hand side. This is listed in Canadian dollars. So the share price in late November kind of peaked around $1.70 Canadian. It's sitting around $1.05 today. We did a financing in December, which put cash in the treasury that gives us runway out well into 2027. We have a relatively compact outstanding share base, and we have the working capital in place here to drive, as I say, well into 2027. Rio Tinto, Sumitomo, US Global, RobecoSAM, Schroders out of the UK are all major shareholders, anywhere probably between 1% and 5% ownership in the company. And we have analyst coverage from Roth Capital and the Maxim Group out of New York. What we have is what Nano One really has is a sustainable advantage. We have a way to integrate two key parts of the manufacturing process, what's called the precursor and cathode production. We integrate those into one. And we are leveraging an existing plant and very deep expertise in Quebec. And there we are demonstrating our technology in full-scale equipment, the intellectual property as well. Our process eliminates all wastewater and all waste byproduct, and this helps us decouple from Chinese supply chains where they are basically strapped to some of those concerns, and it's very hard to export that technology to anywhere else in the world. It is easier to permit, it's cost competitive, because we don't have the wastewater. We use far less energy and we use far less water. All very big concerns and really big merits for expanding the supply chain in a Western context, be that in the US and Canada or Europe or even other Asian jurisdictions. We have a capital light licensing model. So we're developing a modular plant design that's enabled by the fact that we don't have wastewater. So we can actually shrink wrap the plant so that it can be the large plants can be duplicated either in series on an individual site or in a more distributed kind of network. And that allows us to scale and grow rapidly as the market adopts the technology. It's a higher margin, recurring kind of royalty stream type business, and this drives a strong balance sheet in the long run and long-term value for shareholders ultimately. Uh, we envisage ourselves taking projects in different jurisdictions all the way to FID, call them development projects, and then spun out either into joint ventures or directly into to licensees. This allows for kind of wide scale licensing, and that's key to really changing the supply chains. No single company can change a supply chain, can change how people use iron or lithium, phosphorus. You need to have the adoption of the underlying process by many players, and they will ultimately drive the supply chain, make it more regionalized, and have it decoupled from China. So
Dan?
that's yes, question.
Before we move on to the next part, I was just wondering if you could share with us, so you're the founder of the company, if you could kind of share with us, how did you guys come about creating this technology? I mean, this technology is such an enabling technology. For me, after all the work we've done on kind of reviewing what you have, it reminds me of a time when I was an advisor to small cap companies, just going back like a long time ago. And the CEO wanted to take a private company and file an S1 and take it public. And I was working with a team that was kind of tasked to help them. And the lead accounting group told the CEO, because of the way that they'd run the company poorly, he says, for you to file an S1, it would be easier for us to pass a live camel through the eye of a needle than to get an S1 through the SEC on your company. So, but for me, that's an example of to take. You have all the components. I mean, there's lithium production, there's iron production in the Western world, there's all these input materials. But to make them the actual active material, the CAM, it would be impossible to do it in the current technologies that are used in Asia in the Western world because of all of the downstream pollutants that it creates. Am I correct in assuming that this technology now allows you to build these materials like in the US or in Europe, places like that? And how did you come up with the technology? How'd you figure this out? I mean, it's such a neat, an elegant solution.
Yeah, well, maybe I'll address. You didn't really ask it as a question, but maybe you kind of expressed it. You're talking about a private company going public. We were private at one time, but we were largely backed by brokers and their network of investors. And when we back in 2015, we took the company public through a reverse takeover, an RTO,
Huh?
and on the Canadian exchange. And that we had all the pieces in place. We had all the DNA to do the promotional work and support the markets and everything like that. And that was the kind of the access to capital was the most obvious path and access to capital back in 2015 to give you a sense there. So it was actually relatively easy for us
Yeah, no,
at
the
that time.
example is really more the technology being able to
Yeah.
be utilized in the U.S. I mean, you could never take the type of plant that they're making battery materials in China and just relocate it to the U.S. I mean, you would never
Well,
be able to get it approved, right?
we're walking you through this in more detail. The technology, so we make our one pot technology. We've got it entirely focused right now, and we've done many different battery materials, but we've got it entirely focused on lithium iron phosphate, and I'll
Right.
walk you through why that is. That
Great.
technology actually was first commercialized in Quebec by the very team that now works for Nano One, and so that underlying process that was originally um, used to make the first couple hundred tons of LFP. This is back in 2002 to 2005 timeframe. That technology ultimately made its way to China and grew into a very, very large supply chain. And we understand it very well. And its limitations in the West have to do with the wastewater that's generated. So that makes permitting really difficult, not impossible, but it certainly makes it very difficult and very expensive and very energy intensive. So practically speaking, yes, it's very difficult to build a large supply chain. You might be able to do it in pockets and little pieces here and there, but very hard to build a comprehensive supply chain that's sustainable, long lasting, and such. So you have to change the underlying process. And this is really where the motivation came for us to kind of turn it on its ear. The underlying process does not work in the West. We cannot rely on a whole bunch of wastewater. We cannot be trying to offload a whole bunch of waste stream into industrial sectors that are already swamped with them. Really, what is required here is a reinvention of the process that makes it compatible with the Western permitting kind of regime and really, but the environmental standards that we've all come to enjoy. It's super important for us to be tailoring the process technologies and the supply chains for these kind of regional constraints. And that involves reinventing the process. And in doing so, we believe and totally have to do this in a cost competitive way. You can't just come to the table with a more expensive process that won't get adopted. It has to be simpler. It has to be less costly. There has to be less equipment. It has to have higher yield. It has to be cost competitive, and it has to be environmentally competitive. And ultimately, it has to be able to grow and be performance competitive. And that underlies all of the kind of decisions that we've made since we started the company in kind of 2012 timeframe.
Yeah, that sounds
Hopefully that
great. I
helps.
mean, yeah, it really
Yeah.
does. I mean, for us, it's all about the technology and how it greatly improves, streamlines, and cleans up the current way that they're making these CAM materials. And for us, I mean, you can do everything else here in the US pretty much. It's just making these CAM materials. That's the crux move of making these batteries, because that's what I think enables you to really do it here in the West, right?
Yeah, yeah. And look, there's a slide coming up on that, and I'll at the risk of just putting that question off for or that comment off for a little bit, I'm gonna be expanding on it in a couple slides.
Right.
So let me dive into this. Look, the shareholders are looking at this. It's kind of a why invest in Nano One, or where is the value? First of all, we have a scalable business model. We do have a plant, and it will generate some revenues. It'll cover some of our costs ultimately. But it's the licensing-based business model. The fact that we have a technology solution that can be licensed through joint venture, where we're involved, or in a more distributed fashion to companies looking to build competitive businesses here in the U.S. or in Canada or the West. So that licensing-based business model offers high margin and ultimately royalty streaming revenue business, which of course in strong markets that delivers many multiples to shareholders on the value of the company. So that's something that I think shareholders, certainly the shareholders we have right now, really value, and something that new entrants and people looking at the company should look at very carefully. We have strategic partnerships and validation in place. Rio Tinto, one of the world's largest mining companies, Sumitomo Metal Mining, one of the oldest mining companies in the world, and the most vertically integrated company in the battery supply chain. They make copper and nickel, but they also make precursor and cathode material. And they came to us because they recognized the wastewater was a problem for them, not only to expand their business in Japan and Asia, but very much so in Europe and North America, recognizing that wastewater was at the key to scaling business elsewhere in the world. And ultimately, we have Worley. Worley is one of the world's largest engineering firms, and we have an alliance with them to de-risk the technology, de-risk the commercialization of technology, and build technology packages for our licensing strategy. And we'll be getting to that in more detail. And all of this is aimed at the electric vehicle market, the ESS and AI and data center market, and actually really where we're most focused right now is on the defense industry for these, what they call dual purpose markets. So defense and civilian applications for batteries. The markets are small, but there's something we can feed out of the plant we have in Quebec, and they lead ultimately to more confidence in the product, which then leads to larger offtakes and the build out of larger facilities to feed the ESS and electric vehicle markets. And then on a third point, we are at a hinge point right now at Nano One. Um, we are targeting revenue sales first sight lines on those in 2026, and that will begin not only to drive our balance sheet in a small way, but I think more importantly, it will actually prove the product and the process and the people and the know-how and the plant that we have in Quebec, and that will drive larger sales and ultimately drive sales that will require the build out of larger facilities, and that drives our whole licensing strategy. So that gives you a sense of how we're approaching the market, who our partners are, and why the scalable business model is so attractive to the shareholders that we already have in place.
Great.
A little bit of we haven't really talked about batteries for the underlying technology, so maybe we'll just dive into this in a shallow way because we have
Yeah.
limited time.
Yeah,
Uh,
let's just do it
uh,
pretty quick.
yeah, lithium-ion batteries. Look, there's two electrodes: the anode and the cathode. The anode is typically graphite smeared onto copper foil. The cathode, the cathode side of the battery is a cathode material made of. It's a composite made of lithium, nickel, manganese, cobalt, or lithium, iron, and phosphorus. It's a black powder, and it's smeared onto a piece of aluminum foil. All of that sandwiched with a separator in between them. And what happens when you charge and discharge a battery is the lithium ions actually are shuttled in solution back and forth as you charge and discharge the battery. When the battery is fully charged, the lithium all sits over on the anode side. When the battery is fully discharged, the lithium all sits over on the cathode side. And that's kind of how a lithium ion battery works. And there are many different flavors of those lithium ion batteries. Here are some examples. There's LFP, that's lithium iron phosphate, and lithium manganese iron phosphate, LMFP. There's nickel-based batteries. There's batteries with no cobalt. We've worked on all of these chemistries, but 100% of our focus is now turned to lithium iron phosphate because that's where we believe the market is ultimately going. In China, they're probably about 80% market share in China, and that's in electric vehicle, ESS, industrial, data centers, whatever it may be. And the reason LFP is so important, it's the most durable, so it's the longest lasting. You get the most battery cycles out of it. It's the safest. So it can undergo much bigger kind of heat fluctuations. It's the lowest cost because the balance of metals, iron and phosphorus, are relatively low cost, and and we've seen the innovations at the pack level. This is the battery pack, let's say, that goes between the wheels in a vehicle. We've seen the energy density increase on those packs because the battery's safer. You don't have to have as much thermal management, and it's basically on par with the nickel-based batteries. So we've seen this coming for some time. We're seeing it play out in China. It's going to play out everywhere else in the world as well. The cathode is the most expensive complex component in the battery, and that's because of all those metals that are in there. And it's key to energy density, it's key to durability, power output, efficiency, and it's the most complex and energy intensive and environmentally intensive component in the battery as well. So to be competitive, to build something that is an alternative to China, you have to kind of address all of the above, and that's what we're aiming to do. Before we get into that, and you talked a little bit about this Clay, when you were talking about the supply chain. I want to walk you through this. The global battery supply chain has a very major bottleneck, and that is in the cathode materials. So you mine lithium or nickel or iron or phosphorus wherever it comes out of the ground in the world, and it may get refined close by. Although a good chunk of it actually is shipped off to China and other jurisdictions to be refined into a battery grade material, and then it's made into a precursor where let's say you combine the nickel and the manganese and the cobalt into it's basically it's a precursor before you get to the lithium part of it, and or iron and phosphorus. So there's all these different flavors and combinations, and this is where China really has the biggest stranglehold. They control. For LFP, they control, almost, reaching on, 98, 99, 100% of the world's LFP cathode materials are made in China and their precursors. And so, and they've done that by industrializing, by controlling the supply chain, by crushing the prices down to very, very small margins, if not negative margins. And that makes it very difficult for Western companies to compete against, certainly by copying. We've seen response to that. It's led to a whole bunch of global trade tensions. Of course, we've seen the U.S. restrict prohibited foreign entities. We've seen the One Big Beautiful Bill Act, the OBBA, and a whole bunch of tax measures in place to try and incentivize the localization of those supply chains. We've seen the G7 pledging to diversify their supply chains. We've seen China actually restrict access to their LFP materials. Their very best of the LFP materials, their latest LFP technologies, their product, their equipment. All of this is an indication that China does have actually a pretty good stronghold on it, and they're trying to protect it. And the rest of the world's trying to figure out how to basically break that stranglehold, unlock it, and start to regionalize those supply chains to make them ultimately more diverse and more secure. So in comes Nano One. What do we do that actually enables this to happen? At the bottom of this very complicated screen, you can see the conventional process for making LFP. So I mentioned it earlier. We know this very well. Our team originated this stuff back in 2002, when literally there are only tons of it being made in the world. And again, you mine the materials where you mine them. They're refined into high purity materials. Ultimately, the way they do it in China is they make a precursor from iron sulfate. Iron sulfate in China is a waste stream that comes from titanium mining and refining. There's very large volumes of it there. It doesn't exist anywhere else in the world. So China essentially gets it for free, but it creates a very large volume waste stream. There's a lot of wastewater. There's a lot of sulfate waste in the form of ammonium or sodium sulfate, and it has to be dealt with. It either has to be discharged into waterways, which of course won't work anywhere in the West. A dry stack, which is very difficult and expensive. Converted into some other chemical, which is energy intensive. These are all impediments to growth in the West and barriers to entry for large players. And all of that happens before you ever get to the lithium. Once they've made these precursors, they add the lithium in the CAM stage of the process, and often it's at even a different company, and it may actually be in a different jurisdiction. It may even be in Korea or somewhere else in the West. The lithiation step is the relatively straightforward step. What we've done at Nano One is we combine the precursor step and the cathode step into one. That's the one pot process. That's where the name comes from. It enables us to drive down the cost of equipment. It enables us to use basically sulfate-free input materials, which eliminates all of the wastewater and all of the sulfate byproduct. And that means we have no externalities. It means we can shrink wrap the plant into a singular design. We've got 52 patents currently issued in the US and Canada, of course, but also in jurisdictions like Korea, Japan, Taiwan, China, India, and growing worldwide. We have another 50 patents pending around the world, and we continue to add patents to our portfolio. It's actually the bread and butter of what we do. It's how we protect our underlying technology by continuing to invent and continuing to improve on the technology. What this has done for us through our techno-economic analysis, our work with Worley and other engineering firms, we believe we can be cost competitive with China. We can help drive down the OPEX of existing methodologies by 30%, the CapEx by 30%. We get rid of 80% of the energy and water usage. Ultimately, as I said, we get rid of the wastewater, and in doing so, we also reduce GHGs. That's kind of the bonus of this, using less energy. And ultimately, too, by steering away from that iron sulfate down at the bottom of the screen and going to sulfate-free materials like iron oxide or iron metal powders with partners like Rio Tinto and some of their peers in the iron supply space, we can actually diversify away from China's stranglehold on that iron sulfate and break free from that supply chain that they control, ultimately driving cost and really a national security imperative here to drive the regionalization and localization of the supply chain. A
Well,
lot to
that's
absorb there, Clay. So I'm going to pause because I'm sure there's
Yeah, let's
questions.
do. I mean, this is for everyone listening. This is a really, really important part of the presentation. I'd consider it the queen stage of the presentation. You know, no question, it looks as if you guys have developed, you and the group in Candiac have really developed and built a better mousetrap that greatly improves in so many ways the current technology of making CAM materials and making batteries per se. And for us, it's almost like there's a huge river between, you know, the people who want to make CAM and batteries and then, being able to do it. And you're like the only bridge that crosses that really wide river. And everyone's going to have to go through you since you have all this intellectual property coverage to be able to build batteries in this new methodology. I think it's really important. And now we're kind of seeing a lot of these forces all coalescing together to drive the adoption of this new technology. Certainly the regulations that are being put in place, the emphasis on building Western supply chains and removing the dependence of sourcing all this battery and battery materials from Asia and specifically from China. So I think you could just use this one slide and the whole presentation could be built around this one slide.
Yeah,
Now,
you're right about that, actually. Although it's yeah,
there's a lot to
and
talk about for sure.
yeah.
Now, you'd mentioned this before, but your process works for just about any flavor of battery, right? The manganese, the cobalts, the lithium, the iron phosphates. And it also makes a better product, an end product. If we've read that the batteries that are going to be built with your process have better longevity, better durability than the Chinese process because of the lower crystal size and things like that. Could you talk just a bit about that?
Well, maybe I'm going to kind of reset the expectation there on that. So,
Okay.
look, China, and look, realistically, China's been at this game for a long time,
Sure.
and they've got massive volumes, and in doing so, they've been able to refine their process and make their product better and better and better. So, like, they're sitting at it's the highest quality, lowest cost product, in the world today, and the highest volume. Um, so we're making an LFP alternative that can match or beat the cost depending on the jurisdiction you put it in, and ultimately we believe at volume we can compete on the quality front. The battery that gets made, the LFP battery that gets made, and how it performs is going to very much depend on that vendor. Whether that's a
Sure.
Chinese LFP producer, LFP battery producer, a North American one, whether that's a or a European one or a Korean player. That's going to very much depend on them how that battery performs. Ultimately, the LFP materials that go into these batteries have to be plug and play. So, if Ford or LGES or let's say a battery company in Europe is lining up their suppliers, they need multiple suppliers. They need multiple supplies of LFP. What we want to do, and some of that, may grow into, a Chinese supplier and a European or a North American or an American supplier, and they'll have both of those. Once they get comfort with the regional supplier, they'll shift as much as they can away from China. The quality and performance of those materials have to be very similar because you're plugging them ultimately into the same battery manufacturing chain. As our volumes get bigger, our quality will get better and better and better, and start to, we will always get better. We're in the business of continuous improvement, and so I want to emphasize that's a really important part of what we're doing. We can our technology, as I said, we've focused on nickel-based batteries and cobalt-based batteries and now iron-based batteries. We think a lithium iron phosphate is where all the growth is and where all the opportunities. So we're 100% focused on that. That can go into a conventional, cylindrical battery. You can go to a flat battery, like you might have, or what's called a prismatic battery or a pouch cell that's built into larger battery packs. LFP is actually a common ingredient in solid state batteries, but until those batteries are any significant volume, we're going to focus on where the mass market is, because mass market production is really what we're trying to do. We're going to be licensing out very large plants, very large volume production to drive down the cost, to drive up the quality, and ultimately make a more competitive and sustainable solution. And you'll see ultimately you'll see emerging technologies, let's say in solid state, starting to adopt LFP and other cathode materials, but they'll be peeling off very small volumes to start with. And until those markets are in place, we're certainly very interested in that. But our focus right now is on the major growth areas, ESS, data centers, and ultimately, really the emerging need here in all these defense contractors and the growth in defense spending that's happening not only in Canada and the U.S. but also worldwide. We're seeing a complete boon in defense spending, and we believe that's what's going to initially drive our business because they have an imperative. They need to get off of risky supply chains,
It's
and they need to do
mandated.
it. It's
I think it's
mandated.
what
It's
the
yeah,
27 forward, they have to be 100% Western sourced, right?
yeah, yeah. And the problem is that they cannot make a market themselves. Like they're not the same kind of volumes as an automotives
No.
and ESS and data center. So they have to come in and really help prop up these supply chains, get them so they're large, because the only way they're going to be sustainable is if they're large.
Hmm.
What they are is they're the catalyst that's really going to drive growth in this industry and get us to the kind of volumes that are going to make it sustainable, long lasting, and that's where we believe our first kind of major target is here. It doesn't mean we're working simultaneously with the data centers and various EV companies on building out confidence in the product and the process and the supply chain and our partnerships. But ultimately, it's the defense industry and those first small offtakes that are going to bring the confidence to really drive our licensing growth model forward.
That makes sense because you're in a qualification process with a number of different prospective partners, vendors, et cetera. Can you tell us a little bit more about how you qualify your materials and how it's working with some of the different markets that you're looking to approach?
Yeah. Yeah, look, it starts out with kind of chemical qualification, and then if that's approved, it goes into cell production, and then
Mhm.
that starts with very small cells, very small volumes, very small. You're talking grams or hundreds of grams, or maybe a kilogram of material. That ultimately moves to hundreds of kilograms, and ultimately to tons. Each one of these stages, um, um, the cell producer or the cell producer and let's say their OEM partner, they take, they're going to spend more and more money on proving that out and de-risking it. Look, they have to put batteries between wheels today, so they actually have to source those from known sources. Most of it's in China and Korea. But they're looking for off ramps. They're looking for ways to bring that to bear. These tests, certainly for some of these high volume producers, take a long time. You have to build these relationships. So we've been actively doing that for quite some time. It's all in parallel to also driving smaller markets, like I said, in the defense industry. And so the applications are kind of market wide. We're kind of agnostic to the application, to who the company is, but each one of these market segments have different sales cycles, and the sales cycles are very much dependent on really the kind of risk that these companies are taking to, let's say, to build a cell plant or to build an EV plant, as opposed to a company that's building much smaller sort of battery production for defense industry. So each one of them have different time horizons.
Mhm.
Well, we're not doing them in series. It's all kind of happening in parallel,
All the time.
and we believe the defense industry ones are the ones that are really gonna again drive our business here in 2026 and moving forward.
Well, yeah, for sure, you see a lot of that in the DoD and some of the ESS storage for data centers and things like that. But for us, you definitely have seen some headwinds for EVs here in the U.S. The new administration, of course, has kind of changed the game there. But globally, we see a huge move towards electrification of transportation. Um, are you seeing you're seeing interest from some of those different automakers to maybe look at your
Yeah,
process more? Can you talk a bit about that and
yeah, we've
what the
kind of
record growth is like?
yeah, but like we've said this before, and we have relationships that kind of across the board with pretty much all the major automotive companies, and those
Battery
relationships and
suppliers, right?
all yeah, they're all in varying stages, and there's a European, North American as well. Speaking, but we do see kind of different types of behaviors in the, let's say, North America versus Europe. So US, we've seen OEMs, I would say, lowering their electric vehicle ambitions. There's still pretty much a very aggressive adoption of electric vehicles in the US. It's just they've kind of they've kind of lowered their targets. But in doing so, they've done a couple of things that are really interesting and pretty much play into our wheelhouse. First of all, they're diversifying their batteries to lithium iron phosphate because that's really where the low cost mass market battery is going to play a role. It's going to play a role in lower cost electric vehicles. And ultimately, they're also hedging some of these growth uncertainties in electric vehicle space by redirecting some of their battery initiatives towards ESS and data centers. So while what we've seen is we've seen the demand in the U.S. shift from the balance of demand shift towards ESS. There's still a lot of EV demand, of course, but the balance of shift towards ESS data centers and such. So that's an important thing to understand here in North America. In the EU, there was a piece of news out yesterday from Reuters confirming that there were the battery electric vehicles in December. The sales of battery electric vehicles surpassed petrol cars for the first
Wow.
time ever, and
Yeah,
that
we saw
kind of
that article.
confirms, yeah, that confirms a structural shift in the European Union towards the adoption of battery electric vehicles and hybrid electric vehicles. They're both going to play, very important roles on the roads there, and ultimately they will here too. I just think that we have to work through some of the demand cycles here, and the adoption is going to be a little different here than it is in Europe. So what's good for us is everyone recognizes that LFP is the future for both of these applications. And we're sitting here with a technology we believe that could be cost competitive and ultimately address a mass market, not only in the ESS space, but ultimately also in the electric vehicle space.
That totally makes sense. So you have the plant in Candiac that's rated for like what, 200 tons, something like that. Um,
Yeah.
let's talk about what you can make now and how you look to monetize the business, build revenues, and create shareholder or enterprise value.
Well, so I'm flipping between
Sure.
slides here because we haven't really got much into the Candiac thing, but maybe let's talk about this kind of multi-track revenue growth. So
Great.
this slide here kind of really represents it quite well. So we have a facility in Candiac, which is just outside of Montreal, in Quebec in Canada, and that was a plant that was built to make LFP cathode materials back in 2012 timeframe. It originated back to kind of 2002, 2005. They had a couple pilot plants, and ultimately they built this plant. It was one of the first in the world. It never grew much beyond the size of it because really battery demand in the West didn't really pick up, and it also had some structural issues in the sense that they chose a process. They moved from the process that they developed first into what's called a hydrothermal process, and made a very good LFP, but had a lot of wastewater and a big waste stream, and that made it very difficult to scale. We had an opportunity to buy that plant in 2022, and we jumped on it because they had the key piece of equipment. They had the chemical reactors, they had the spray dryers, which actually transform the slurry into a powder, and they had the furnaces to bake the material into a finished material. And that's what we saw as an opportunity. We walked in, we bought that facility. We decommissioned all of the wastewater handling and actually the existing kind of reactor skids. And we installed a small pilot line that could run 200 tons per annum into the spray dryers and furnaces. And we've been operating the existing reactors in a manual mode for some time. That and that's all. This is all about demonstrating the technology, being able to sample out to customers for evaluation and such. This drew the attention of the Pentagon, the Department of Defense, and the Quebec government, both who have invested in the scale up of that plant. And what that really means is is we're re-automating those large scale reactors to bring them back to 800 tons, maybe further if demand dictates it. But we think 800 tons is kind of the sweet spot for addressing the defense industry and also building the confidence in larger off-takers to drive our whole licensing strategy. So we've got two sets of reactors, 200 ton per annum and and ultimately 800 ton per annum with the investment help from the Department of Defense and the Quebec government. Ultimately, we'll have those two lines feeding into the spray dryer and the furnace to drive our sampling and our some of our first revenues, ultimately offtake for larger plants and bringing about the sales into the defense industry. So all that happens in a little blue line at the bottom of the graph. Relatively modest revenues coming out of that, but building on that, that builds the confidence in the product and the process and the people and the know-how and the flow sheets and the equipment. That then drives our whole licensing strategy, which is a plant that's 10 times that size. Just a single production line would be 25,000 tons. You might have several of those on a given site to feed an automotive plant or to feed a battery plant that's feeding the ESS industry. And so then you're suddenly getting into tens of thousands, hundreds of thousands of tons. And that's where you start to see the licensing royalties really grow here. You might see a joint venture in there to start with some of our partners. We might see pure licensing royalty plays where we're just extracting project development fees, license fees, training fees, and ultimately a royalty stream based on the production rates of those plants. And that's kind of where all this stuff starts to stack up and build shareholder value, obviously in a royalty streaming business.
That's your growth model. So is the direct sales at Candiac, is that plant certified and could I buy materials there today if I was a battery maker?
That's a it's a great question. So that plant has so obviously in the past it made battery materials and was
But
selling
for the
into
one pot technology, this is the
yeah.
beta for the one pot, right?
Yeah, it's a pilot and a demonstration facility. We haven't completed the work on the demonstration facility, so it's basically we have a whole bunch of automation and plumbing to put back in place because we ripped all that out when
Okay.
we bought the plant. So that's what the funding from the DoD and the Canadian or the Quebec government is going towards, and the Canadian government for that matter. And ultimately, yeah, that will be a certified plant that can deliver relatively small volumes,
Mhm.
but we think we can serve the defense industry from that plant and as I said, ultimately also serve all of the sampling needs that the much larger markets will be needing, and ultimately drive interest in building larger facilities and larger supply chains and the whole licensing strategy. So the pilot plant today is we're able to make materials from that, and we are pursuing the qualification of those materials for sales. And as those smaller customers need larger amounts of material, we'll be able to feed that from the 800-ton reactors that we're bringing online over the next year.
Okay, great. So then you're kind of using that to learn how to build the next size plant, right? And that's the build or design once, build many.
Yeah.
Can you talk a bit about that? And I think that's the key to, creating value for the company now is to sell these turnkey plants, right?
Yeah.
Or
So I
license.
mentioned earlier that we're partnered with Worley, a very large engineering company, with their technology solutions team. And actually, we had a little tweet out, tweet and LinkedIn post out just overnight. Encourage your listeners to go have a look. And we've been working with Worley for a good year and a half, actually longer than that, kind of behind closed doors. And really, what we're doing with what we did, we met with them last week in Montreal. I was there at the plant in Candiac and developing our kind of 2026 strategic plan and kicking all of that off. At the plant with us was the global technology solutions company. So Worley's an engineering company. Most people think what they do is they design and build plants, and they do that. That's the majority of their business. But within Worley is a technology solutions provider. And that provider is comprised of a company called Worley Chemetics and Worley Comprimo. Worley Chemetics is a 60-year-old company, a global technology solutions company, equipment fabricator for sulfuric acid, plants, chlorine chemicals, and other chemicals. And Comprima was the largest sulfur recovery and gas treatment technology provider in the world today, and they're over 100 years old. So these are companies that are really, really well versed at selling technology, not necessarily building the plant, but selling the guts of the plant and the really key components of that plant that drive it. Everything else, the wire racks, the bolts, the plumbing, the pumps, those are all kind of bread and butter things that an engineering firm, it could be Worley or it could be someone else, will build around the plant. But the key thing is actually extracting the value out of the core pieces of technology. And that's what Worley and Nano One came together to do. So in doing that, we're able to design a modular, scalable, globally deployable plant. And that's the reason it's modular is because you don't have wastewater. If you don't have wastewater, you don't have to have custom engineering to deal with local permitting issues. If you don't have the local permitting issues, you can kind of shrink wrap the plant into a package. We can use what we have in Candiac to generate the customers. We're working with Worley to pre-qualify equipment that would go into the plant, the major pieces of equipment. And we're also working with our partners like Rio Tinto and many of the lithium and phosphate providers in the world to pre-qualify the raw material inputs. In a sense, we're franchising LFP into this plant that can be plopped down anywhere in the world and with a very little permitting risk compared to other technologies.
Well,
And
that's
with that technology comes the IP rights, and like I say, the equipment, the process design, the plant design, and ultimately it comes to Nano One. It comes with an upfront fee and a royalty stream. And the alliance with Worley, they're not just an engineering sort of alliance partner here. They're also very much a sales partner. They're incentivized to sell tech patches very much by the agreement we have. They're investing in engineering, flow sheets, design, pre-qualification of equipment, as I said. Basically, yeah, as I said, the guts of what matters really matters in the plant. And ultimately, that the design, marketing, and licensing technology packages that we're doing with them is very much what the alliance is about.
that's
So
great. So
yeah, hopefully that explains it well.
yeah, it does. I mean, you're basically tearing a page out of Ray Kroc's business manual and taking the one pot technology down the road of the McDonald's franchise. And I could see how it would be very amenable to a lot of these different battery supply chain manufacturers. You could just drop one of these plants in. It's already pre-designed. Now, can this one plant make more than one kind of battery, or is it bespoke to the certain specific battery type, or can you make different batteries from the same line,
Well,
different CAM materials for different
different
batteries?
CAM materials, yeah. So no, I mean typically you'd have one plant, one line dedicated to, let's say, LFP.
Right. So
You
it's
know,
real
I've been
specific.
to cathode facilities around the world where they might actually have, let's say, a cobalt based side of the plant and an iron based side of the plant. You
Right.
don't want to mix any of that stuff because actually,
Sure.
um, uh, uh, but typically, yeah, you want that machinery running 24/7 because
Right.
it's not
Yeah.
cheap,
They're
and you're paying
dedicated.
down. And you're paying down debt on it and all of that stuff. Yeah, downtime is you want to minimize that downtime, and that's another key advantage of the Nano One technology and working with Worley here, is that because we've got far less equipment in the plant, yield is up, uptime is up, downtime is less problematic. Ultimately, we believe a simpler, less complex plant is going to deliver a plant that can deliver much higher yields and ultimately get to a financial decision much quicker and be much more attractive to banks and lenders and those who finance projects.
Absolutely. I mean, there's no question. It's such a great solution to a difficult problem. Oh yeah, this is a great slide too. I like this one, the kind of development and some of the great things you've done financially with the plant and or the Candiac
Yeah.
facility.
So we've talked a little bit about the history. Actually, LFP was invented in the U.S. By a guy named Dr. John Goodenough at the University of Texas, but it wasn't until Quebec figured out how to carbon coat it that it was actually practically usable. So this happened in Quebec. Ultimately, Fostech took the first license, built the first plant, ultimately built Candiac before we acquired it. Some of that original processing technology they did in 2000 kind of five timeframe actually made its way to China, and it's largely what is used in China. So we know it very, very well, and we know its strengths in China, and we know its limitations in the West. That led us to obviously acquire the plant, as I described before. That brought in, the acquisition of that plant brought in Rio Tinto, Sumitomo Metal Mining at a time when the valuation of the company was kind of in the $300 million kind of Canadian range, to call it 250 to low 200 US range.
Mhm.
It brought Worley in as a licensing alliance partner. A whole bunch of different Canadian funding agencies came in with grants to help facilitate the growth of that industry, and that also attracted the Department of Defense, the Quebec government. We bought the facility for 10 million, and we sold the land and the building for 20. And we still have all the equipment and the whole team, the key components. So I think we've been very judicious with our shareholders' money, and we create a lot of value from that, and that's really helped us keep dilution down in
Sure.
the shareholder position, and keep shareholder value up.
I mean, you've done some great work with some real estate. You flipped some real estate, made 10 million bucks. You got all this like 25+ million worth of public money,
Yeah.
non-dilutive financing into. We got a couple questions. First, I'm going to go to Al. Al, I'm going to turn on your microphone so you can ask your question if you'd like to.
Can you hear me?
Yeah, we
Yeah, I
can.
sure
Hi,
can.
Al. How are you?
Okay. Okay. Yeah. So I was going to ask, what does your retained earnings look like? And what I'm really trying to get at is how much money has been spent to get to the company to where it is today.
So, kind of roughly, we've probably spent in the kind of $60 million range. We've got another 20, 30 to draw down from some of the government funding. So give you a sense of kind of where it looks like, what it looks like. We do not have earnings today.
Yeah, we're pre-revenue at this
We're
point, Al.
pre-revenue. Yeah, yeah.
Yeah,
Right. No,
yeah,
I do understand that.
yeah.
Yeah.
Okay. So it sounds like from various sources, something like about $80 million or so has been invested in the company so far.
Yeah, so that includes, of course, the capital markets, and includes government funding as well.
Okay.
It's a
Do you currently
it's a
have
bit of a
any
sliding
debt?
scale, because, of course, not all of it is in the bank. Some of it is
Right.
the way these government funds work is we have a grant on a project, we spend money on the project, they reimburse, and
Okay.
so there's basically a cash flow, cash management part of the business, certainly at this stage.
Okay. And your market cap is what, something like $70 million, I think you said?
That is correct. Yes.
Okay. Okay. Um, Secondly, what would it cost to reproduce that plant that you acquired, the Candilac plant?
Oh, the Candiac plant. I can tell you what, it was built in 2012. It was built for 75 million US. So that's in 2012. There's been
Right.
certainly a lot of inflation from there, and
Sure.
and we bought it for 10
Right.
million Canadian, actually. So yeah, call it 8 million US. So we bought it for about a
Okay.
tenth of its original cost.
Okay. So easily it would cost probably something like a 125 to 150 to reproduce that plant.
Yeah, and that's one of the things that gives us a really big running head start on anyone in the industry right now, because it's very, that's a fairly big capital lift for a
Sure.
uh, for a
Sure.
pilot plant, and we were able to leverage existing assets. And I think probably one of the most important things, and probably one of the most understated things, is the team came with that. The team is intact, and the know-how is
Okay.
intact, and they've actually supplied the automotive and tier two battery suppliers into the automotive space in the past, and the defense industry. So they have we have all the processes already kind of we have the QA and the QC processes already very well understood. You cannot underestimate those. Some new entrants, it could take them 2, 3 years to get through some of those hoops, and we just, we understand that stuff. We've been audited many times in the past when we were making materials out of that plant. It's a huge advantage. So, hard to put a number on it, but we think it, all told, it gives us, certainly a multi-year head start from some other companies that are kind of trying to gauge and start in this industry.
Okay. I got a call from from my doctor just a few minutes ago, so I may have missed what you said. Can you characterize where your negotiations are with the various automobile manufacturers, some potential Korean, Japanese corporations who are interested in the process?
Well, maybe I'll frame it this way. Well, ultimately, our negotiations are, who are selling, who we would sell materials, or our licensees would sell materials to, are the cell producers. So whoever's making the cells for, let's say, for ESS and battery, ESS sort of data applications, or whoever's making the cells for automotive companies. What we typically see in the automotive industry is the automotives will partner with the cell producers. So I'll just give you examples here. You've got Ford actually looking to partner with the largest battery producer in the world out of China, CATL. It's a technology partnership. You've got Stellantis
Nice.
partnering with LG Energy Systems in various jurisdictions. And then you've got GM and Tesla also partnering with various other cell producers to put things together. But and when we look, we have relationships with all of the above. We're not giving any guidance on the state of those relationships. What I can say is that there is technology evaluation underway with a number of them. We have materials, cathode materials, in for evaluation in battery with battery testers, and this is at both at the smaller off-taker level. This would be for the defense contractors, but also ultimately we believe for the larger players. Look, there is no wide-scale battery technology, battery production know-how in the U.S., Canada, or Europe. It's largely going to be coming from Korea and China. So you get CATL, Goshen out of China. You've got Samsung, SDI, SK On, and LG Energy Systems are all players that have their fingers in various ways, either with the automotive companies or independently trying to feed into the ESS market. And we see that in the US. The slide is up here right now. Actually, it's a great segue to the slide here. There's about 200 gigawatt hours of announced US LFP cell capacity production in the pipeline for 2030. To give you a sense of what that is, 200 gigawatt hours in LFP cells would require about 400,000 tons of LFP CAM production. So that's roughly 400 times the size of what we have in Candiac. So this is just in the US. However, and there's a whole bunch of tax incentives. So for every gigawatt hour of cell production, the US is offering $35 million in tax credits. That amounts to about $7 billion a year in tax credits that are kind of
Wow.
on the line if they can localize supply chains. And that's actually the key thing. If they can't localize those supply chains under what we call the prohibited foreign entity and the 45X, there's still rulings to come out on that in the US. But if they can't, then a lot of that tax credit is at risk. And so to us, the incentives couldn't be clearer that lithium iron phosphate must be kind of economically regionalized, not just within the US, but within the broader reach of the US supply chain, be that Canada or other allied nations that are not considered prohibited foreign content. So I wanted to kind of give you that context, and some of these companies, some of these cell producers, as I say, you know all the OEMs, but the underlying cell producers are the ones I mentioned earlier, the Chinese and Korean players who are trying to find ways to come in and partner legally within the U.S., Canada, Europe. They have the technology and the know-how. I sure hope that I want to see them. I want the U.S. and Canada to learn from them and to build their own industry and become self-sufficient. I mean, ultimately, that's what we're all looking here for.
And
Okay, well, thanks for answering my questions. An incredibly interesting story.
yeah,
Great. Well, thank you for your interest.
yeah, thanks, Al. Great questions. And there's 35 million per gigawatt hour. If you bring that down to the kilowatt hour, it's like a 30+% return, right?
Yeah,
On the
actually,
cost.
I'll give you a sense. So $35 a kilowatt hour.
Yeah.
Just take the million out of there, right? It's $35 a kilowatt hour. Today in China, LFP batteries are being made for somewhere
100.
between kind of, 50 to 60 to $70 a kilowatt hour.
Right. So
And
it's like half.
yeah, and it's more expensive to make them here. I
Sure,
think we're
of
seeing
course.
kind of,
Right now.
100 plus, but with volume, that number will come down. And
Right. Yeah.
so that's what these incentives are for. Is they're incentives to try and ramp up volumes to become self-sufficient ultimately, so they don't need this tax credit incentive.
Yeah.
Ultimately, that's where it needs to get to. But this is where government plays such an important role in a nascent industry like that. Is to provide the protections, the umbrella, the support, and really to kickstart and catalyze this industry. And as I said, the incentives here couldn't be clearer, and we're sitting in a really sweet spot, we believe, with a cost competitive, environmentally competitive solution that can address the needs of these cell producers to localize their supply chains.
For us, you look like you're the only game in town if they want to westernize this supply chain. And we're kind of at the end of our time
Yeah,
right now, Dan. So I know there's a lot more data to go through. I'm sorry that we didn't get through the whole presentation. That's probably my fault. Um, Before we wrap it up, is there anything that you'd like to close with? And then we'll
yeah.
just kind of put this up to
Look,
YouTube.
I think this is always the best slide to close on is what can investors look to Nano One for catalysts. We're just through 2025. We completed a bunch of catalysts, finance. We had small financing in December. We brought in a whole bunch of government funding. We did a sale and lease back on the land, so we should really bolster our treasury with non-dilutive capital. We've been working our CAM package forward. This is basically the engineering design package with Worley. Yesterday we disclosed that we had been meeting with them on the 2026 plans, and I would say just stay tuned on that. We're looking to obviously bring forward an aggressive kind of sales and marketing campaign with our partner Worley. We put the one pot equipment in place, and we're now doing the kind of the automation work on the 800 ton per annum branch of our pilot plant. We have actually had tremendous influence on government policy. We see some of our language actually in some of the U.S. policy. It's distinctly Nano One, and so we're
Yeah, it's coming.
advocating. We're advocating on a very serious level here, and we've got a lot of attention there, and we're not finished bringing partners to the table. Rio, Sumitomo, Worley are all very big advanced partners, but we're talking to more, and we want to bring more. So these are all kind of catalysts to come. The expansion, it takes time. There's lead time on equipment, and we'll be putting this plant together over 2026.
Hmm.
Trying to get to 800 tons. Demand, if demand is there, we could push that, maybe a little bit further with a little bit more investment. Ultimately, 2026 is where we see this is our target and for first LFP sales. Long before those sales come into place, it's towards the end of the year. We're looking to have the MOUs in place. We're looking to actually bring some names to the market to bring confidence to the market that we're partnering and selling to the right people that are going to give us kind of a long-lasting credibility in this space. And we're moving the licensing forward with our partner Worley. And actually independently as well, we have licensing discussions with some of our existing partners and other partners. But really, I think by bringing this design one, build many package to the table, we think we can drive some of those discussions towards meaningful announcements that will be major catalysts, we believe, in the market, because they will directionally point not only towards sales, but also towards the larger licensing and growth model.
Great.
And we continue to innovate. We'll continue to build out our supply chain partners, and those all play a fundamental role in what we called earlier the franchise that's built around the one
Right.
pot process.
Coming soon to a neighborhood near you. Well,
Yes,
uh,
exactly.
great wrap up. A lot happening. We're always about the timing here, as everyone knows. We want to be in not too early, certainly not too late. We don't mind being a little early. It looks like you're just about to, you've put a lot of work, product into this technology. You've really done your homework, and it looks like you're just about ready to turn the corner, and that's the ideal time that we like to get involved. So we're really excited about what you've got going on. Great presentation. For anyone that would like to get additional information on Nano One, you can go to their website at Nano One. That's NANO ONE, all one word, .ca, not .com, .ca. Get this PowerPoint presentation. There's lots of great information on there, lots of videos, lots of photography. We didn't really get much into the plant, but if you want to go look at a lot of stainless steel equipment, there's a lot of that in there. You can go look at the Candiac plant, look at some of the process, et cetera, et cetera. There's also a lot of information about the commercialization map, what they're going to do going forward. Today's code word is one pot, like the technology, one pot. So they'll need that for your feedback report. Dan, thanks so much for coming on today. We really appreciate it. And we'll look forward to having you on again real soon, especially if you get one of these catalysts. Many of the upcoming catalysts comes, we'll definitely have you coming back on. So I want to thank everyone else for coming on today. This presentation will be pushed to our YouTube channel probably sometime in the next couple of days, and if you like, we can send you a link if someone else would like to see the presentation. Dan, anything else you'd like to say before we close?
No, just thanks very much for your attention and your interest in Nano One. Looking forward to really driving this forward in 2026, and appreciate the support and trust and everything that comes along with this journey.
Great. Well, we'll look forward to having you on again real soon. And we'd like to thank everyone for coming on today. We look forward to having on a future presentation with Torrey Hills Capital. Until then, be safe, be well. Thanks, Dan. We'll talk to you soon.
Appreciate it, Clay. Thank you.
You bet. Bye for now.